Sum number 15, chapter number 9, accounts of non-trading concern. Color work expense 9,000, stationery printing 2,000, capital fund 36,000, donation received 2,000, cash balance 3,000, bank overdraft 1,000, 12% loan from 1,414, 15,000, furniture 8,000. Building of club 35,000, lifetime subscription 2,000, tax insurance 2,500, honorarium to secretary 6,000, entrance fee 6,000, sports equipment 10,000, subscription received in advance 2,000, salary wages 9,000, outstanding salary 1,000, legal expenses 600, subscription 25,000, interest on loan 900, electricity expense 1,000, electric fittings 4,000, locker rent 1,000. Additional information, subscription outstanding rupees 2,000 for the year 14-15. 2/3 color work expense is to be carried forward to next year. Unused stationery is of 1,000. Provide 10% depreciation on building, sports equipment and furniture of club. Consider amount of donation as revenue income and prepaid insurance is of rupees 200. Now we will see solution. Here we have done first adjustment, subscription plus outstanding. Subscription 25,000 plus outstanding 2,000, total 27,000. Second effect, outstanding subscription 2,000. Now adjustment number 3. Unused stationery is of rupees 100. So 2, here it is remaining 9,000. 9,000 multiplied by 2/3, we will get here 6,000. So here it will come 3,000. Second effect, 2/3 color work expense return off. 2/3 color work expense 6,000. How 6,000? So here 9,000 multiply by 2/3. So we'll get here 6,000. Color work expense. Adjustment number 3rd, unused stationery is of rupees 100. So your 2 stationery and printing amount is 2,000 less closing stock amount is 100. So we will get 1,900. Second effect, stationery stock 100 is on balance sheet asset side. Adjustment number 4, provide 10% depreciation on building. Now here building of club amount is 35,000 less 10% depreciation 3,500. So here we will get 31,500. Second, furniture is 8,000 less 10% depreciation. 800. Amount is 7,200. Sports equipment less 10% depreciation. So here 10,000 minus 1,000, amount is 9,000. Now second effect of all depreciation will come on expense side. So here 2 depreciation building furniture and sports equipment. $3,500, 800 and 1,000. So the total we will get 5,300. Now adjustment number 5. Consider amount of donation as revenue income. Your capital fund is 36,000. It will come on liability side. Donation always is added in capital fund. Capital fund 36,000. Your donation is considered as revenue income, so it is not added in capital fund. If only donation is given, then it will be added in capital fund. But here in question they have given donation as revenue income, so it will be written on income side. By donation received. Amount is 2,000. Here prepaid insurance is of rupees 200. Prepaid means minus 2 tax and insurance is 2,500 less prepaid is 200. So here it will be 2,300. Second effect is prepaid insurance. It will come on balance sheet asset side. Prepaid insurance amount is 200. Afterwards, now we have finished all the adjustments. Now we will write entries other than adjustment. Color work expense finished, stationery printing finished, capital fund donation received is of rupees 2000. As they have given an adjustment that donation received is as revenue income. That's why we have written it in income and expenditure income side. Now cash balance in asset side. Cash balance amount is 3000. Next, bank overdraft. It will come on balance sheet liability side. Bank overdraft amount is 1000. Afterwards, 12% loan. 12% loan is 15,000. So it will come whenever loan is there, it will come on liability side. If investment is there, then only it will come on asset side. Here loan is there, so 12% loan. 12% loan is 15,000. Next, furniture we have finished. Depreciation. Afterwards, building of club. Now lifetime subscription. Lifetime subscription is added in capital fund plus lifetime subscription is rupees 2000. Afterwards, tax insurance finished. Honorarium to secretary is expense. So here to honorarium to secretary amount is 6000. Afterwards, subscription entrance fees income. So by entrance fee it is 6000. Next, sports equipment finished. Now subscription received in advance, balance sheet liability side. As it is given in trial balance, so we have to write it only one time, that is on liability side. Subscription received in advance, amount is 2000. Next, salary and wages. Salary and wages expense 9000. It will come on expense side. To salary and wages is 9000. Afterwards, outstanding salary, it will come on liability side. Outstanding salary amount is 1000. Next, legal expenses. It is expense, it will come on expense side. To legal expenses amount is 600. Towards subscription finished. Interest on loan. To interest on loan. Now here 15,000 multiply by 12%, we will get here 1800. This is interest on loan. But here in adjustment, in trial balance, they have given only 900 rupees. Only 900 rupees. Total interest on loan is 1800. So remaining interest is outstanding. that is 900. Its second effect will come here, outstanding interest on loan amount is 900. Electricity expense, to electricity expense amount is 1000. Electric fittings is asset, so it will come on asset side. Electric fittings amount is 4000. Now last, locker rent. Locker rent is income, so by locker rent amount is 1000. Now here we have finished all the entries. We will see again all the whole sum. Subscription outstanding rupees 25,000 plus outstanding 2,000. Second effect of outstanding is subscription outstanding rupees 2,000. Afterwards 2/3 color work is carried forward for next year. So to color work expense 9,000 less 2/3 for the next year is 6,000. Second effect is 2/3 color work expense 6,000 on asset side. Afterwards stationery stock, that unused stationery is there. So to stationery and printing 2,000 less closing stock is 100. So second effect of closing stock of stationery is on balance sheet asset side. Stationery stock rupees 1,000. Afterwards depreciation, building 35,000 less 10% is 3,500. Furniture 8,000 less 10% is 800. Sports equipment 10,000 less 10% is 1,000. Its second effect will come on income and expenditure expense side. To depreciation, building 3,500, furniture 800 and sports equipment 1,000. Total is 5,300. Consider amount of donation as revenue income. Here in trial balance they have given donation received. So we have to count as donation as revenue income. By donation received 2,000 on income side. Afterwards prepaid insurance is of rupees 200. Prepaid insurance always minus. So to tax insurance less prepaid. Second effect of prepaid insurance is balance sheet asset side prepaid insurance. Other whatever entries are there, whatever expenses are there will come on expense side, and whatever income are there on income side. Now total of income is 36,000. Total of income is 36,000. So here also it will come 36,000. If we will deduct all these transactions, we will get a difference of 5,100, which is written as to excess of income over expense. If income is more, then we have to add here excess of income over expense amount is 5,100. So here we will get total amount 43,100. So total of both the side is 63,000. Here we have finished sum number 15.